Hey everyone, on this video, we're going to talk to you about what is going on in the world of financing. What does it take right now moving forward into 2023? How can you obtain a loan? What types of loans are there? Where are interest rates heading? Up or down? We're going to cover it all. But more importantly, there's going to be new programs that it's super important that you learn about. Make sure to tune in to the very end of this video because I'm going to show you why right now, contrary to everything you've heard, might be the best time to get a loan and take advantage of the current market that we're in because you're going to be in a position to win. Hey everyone, I'm Juan Weezar, president of Sage Real Estate. Today I had the privilege to sit down with our mortgage division, Sage Trust Mortgage, Phoebe Tudoroff. She's a wealth of knowledge, and today she's going to talk about what's going on in the world of lending, interest rates, what we can expect, but more importantly, is it really a bad time to get the loan? We're going to show you why that is the wrong message, and we're going to hopefully show you what you can do right now to take advantage of these new programs that are out there that are here to benefit you. Okay, everyone, thank you for tuning in. Today, we're going to talk about the lending landscape. What is going on with interest rates, with financing? Are banks still giving loans? What is happening? I'm here with Phoebe Tudoroff, Sage Trust Mortgage. And so, Phoebe, everyone knows, it's not a secret, interest rates have gone up, and they've gone up more than any of us thought. Walk us through where interest rates are at today, and where do we expect them to go?
Based on research and forecasting and where the market is at, interest rates have ticked down just a bit this month in the last 2 to 3 weeks. 30-year fixed mortgage is somewhere in the neighborhood of 6 3/4. They are anticipating interest rates to tick up in the first quarter of next year. But then when the buying and selling in real estate market starts to pick up come second quarter, interest rates are forecasted to kind of tick back down to maybe where we're at now, maybe a little bit lower sixes, maybe high fives.
So obviously no one has the crystal ball to know exactly where interest rates are going to go. And what Phoebe's saying is that right now, 6 3/4, which is more than double in some cases what it was in certainly 12 months from now.
Yes.
But even in the first quarter of the year,
yes,
interest rates were still in the threes. One of the clients that I work with said that people in general need to get used to 6% being the norm.
I mean, historically, 6% isn't an extremely high interest rate. 20 years ago, that's where interest rates were at, and everyone was still buying and selling. And I do anticipate interest rates coming back down, and they will be higher than everyone was used to for the last 24 months or so. However, they're still at an acceptable rate, and they're not abnormally high.
Phoebe, I had asked you earlier today, from a lending perspective, we talked about new loan purchases. This means, when you're a lender, there's two types of loans that you do. You do a refinance, means someone is trying to get a lower interest rate typically, but then they call it purchase loans, which is someone's actually buying. We know it's slowed down, but how much of a slowdown are you seeing in terms of activity?
Obviously, refinances with the interest rates, refinances have slowed down 80 to 90%, I would say, closer to the 90% range. People are refinancing now solely to take cash out of their property for other means, maybe home improvements, purchasing other assets, that sort of stuff. Purchases have slowed down by probably 50%. With the interest rates being higher, buyers are kind of taking a step back and kind of waiting to see what happens is kind of the feedback I'm getting from buyers that I'm working with.
Okay, so if new loans are down by 50%, that means there's still 50% of folks out there buying. Who is buying? Because I think some of our viewers, based on the headlines, would maybe assume that no one is buying a property or a multifamily right now, but people are buying. Who is still buying?
It's a wide gamut. There's the first-time home buyers that are purchasing houses and condos as their first property. Everyone, is back at work, making decent income. They've been saving money for the last couple of years. They're looking to buy their first property. I see investors coming out now wanting to take advantage of the possible ability of not having multiple offers and competing and bidding wars and able to have a little bit more ground in purchasing and being the best offer. And those investors have been kind of sitting back waiting for the last couple of years to avoid those scenarios. But I do see people purchasing their first home, purchasing their next home, investors purchasing units and multifamily properties, pretty evenly distributed for the type of buyer.
So that's interesting that the 6% is not keeping everyone away from buying something.
No.
What are the benefits? So if you talk to a buyer and an investor, what are the benefits of maybe buying right now?
A buyer is, the market's kind of switched, and it's kind of almost become a buyer's market where there isn't multiple offers and there isn't bidding wars. And a buyer's going to be able to walk in and possibly make an offer below list price and have their offer accepted with concessions. And that's happening across the board, where sellers are actually giving the buyers concessions to entice them to purchase their property.
Right. So one of the things that Phoebe's covering is she's saying, for the first time ever, maybe you don't have to offer the full price. Maybe you could offer less. And when we're talking about concession, there's different types of concessions. And so along with offering less, we don't stop there.
Correct.
We might ask for repairs, price adjustments during an escrow. Phoebe, talk to us about this new program, the 2-1 Buydown, and how this benefits the buyer, yet they don't have to pay for it.
Correct. It's a great new thing that's being offered now. There's a 2-1 Buydown and there's a 1-0 Buydown. The 2-1 Buydown is, it does come at a cost. However, the seller can pay for it. The real estate agent can pay for it. If it's new construction, the builder can pay for it. There's several options of who can contribute the funds to pay for the 2-1 Buydown. And what it means on a 2-1 Buydown is, for instance, say your effective interest rate is 6.5%, just throwing a number out there. The first year of your mortgage, you're going to be paying a mortgage payment 2% less than your effective interest rate. So for the first 12 months, your mortgage payment is going to be at 4.5%.
Okay.
The second 12 months, or month 13 through 24 is going to be 1% below, so 5.5%. And then your loan for years 3 through 30 are back at 6.5%. Right. So for the first 2 years, you are able to have a lower monthly mortgage payment for those first 2 years, and the interest rate it does change. It goes back to your effective interest rate, but for 12 months and 12 months, and then for the rest of your 30-year mortgage, if you're still there or you haven't refinanced because rates have come down, then you are in a win-win situation, and the seller can contribute the funds needed to buy that interest rate down for those first 2 years, or a 1-0 Buydown would be 12 months with 1% less.
Right. So that gives us a terrific opportunity that maybe for the first 24 months, it's a reduced payment. Right. Now, it could be that within 36 months, interest rates have dropped down. And this doesn't have to be the life of the loan. Loans typically with 4 units or less are 30 years. And so this is, because let me give us a scenario. What's the benefit of having super low interest rates and you're a buyer, but you can't compete because you keep losing out to investors? Okay. And so then, yeah, it's great to have low interest rates, but if you cannot get your offer accepted, which a lot of people were in that situation, now you can get it accepted.
Yes, there's a lot of discouraged buyers because they were unable to get their offer accepted.
Yeah.
So
recently, just this week, we were able to submit an offer from a veteran. So he qualified for a VA loan. And so traditionally, I would tell you that when I'm representing a buyer and I'm trying to use the VA loan and trying to get that accepted, it's not very favorable from the seller. The seller says, wait, I'm looking for an offer where there's either a cash offer or 30% down or 25% down.
Correct.
They do not want to accept the VA loan. So what's happening now? Sellers are looking at that offer. It might be the only offer on the table. So they're no longer turning their back on that type of offer. And it's not just VA, it's also FHA.
It's FHA.
So when Phoebe's talking about that, she said something interesting. Experienced investors are now wanting to buy. That should be your first clue that people who have done this before, that have seen various cycles, are wanting to get into the market today. That is like telling you something. That means people with experience who've hopefully made a lot of money are doing something in hopes of making more money. Okay?
Correct.
So that's a very
Correct.
important thing.
Yep.
The second thing is even the first-time home buyers, although a lot of them have been, like you said, spooked and maybe saying, I don't know if I should, they're finally in a position to get that offer accepted. And I think that that is the route to go. For the last 10 years, if you're a buyer, it's really difficult to get a price reduction or any repairs to be paid for by the seller.
Correct.
And now we're in a situation where that is a lot more common.
Oh, it is. It's very common. Yep. It's not even a price reduction. It's a closing cost credit from the get-go. It's a concession for a 2-1 buy down. It's repairs being done, credits for in lieu of repairs. There's so much that a seller will do and agree to do these days that it's really become what I call somewhat of a buyer's market. Yeah, the buyer has the upper hand in many instances. Yep.
So what Phoebe's talking about is that the seller is really willing for the first time ever to accommodate a lot of these requests because they in their mind are thinking, man, I have one buyer and I want to make sure I keep them because there's fear on both sides. I want everyone to know this. There's fear from the buying side. There's fear from the owners. And you would wonder, why is there fear from them too? They're afraid from watching the same news you're watching that maybe if I lose this one buyer now, and if I can't find another one in 3 months from now, it's still not sold, maybe my property's worth less.
Yep.
So that is the number one reason why the seller would be motivated to do so. And that's what's happening. So a few key takeaways. Investors are still buying. New homeowners are still buying. Loans are down.
Loans are significantly
down, but there's still transactions happening. Sellers are selling, buyers are buying. And if you're someone who's been thinking about getting into the market, this is a really good time to get there.
It is.
We talked about the 2-1 buy down. Okay, that's going to save you money for the first 2 years.
Correct.
We talked about all the concessions. And if you're working with an experienced agent, they're going to be able to walk you through and make sure that they're maximizing the purchase for you so that those first 2 years of ownership are acceptable and it's something that you can work with. One of the benefits that I see is the fact that interest rates are so high, the government has actually come out and they've increased the loan limits. This was last week. So it's big news. A lot of our clients are asking about it. So talk to us. What does that mean when someone says they've increased the loan limits? How does that help us, the consumers?
Oh, well, it gives you more buying power. Prior to the announcement, loan limits for our local area here, Orange County, Los Angeles County, the max loan limit for one unit property or single family or condo was $726,200. The government has increased that loan limit to $1,089,300. Wow. So that is a $360,000 increase in buying power. So now the buyer is able to use a much higher loan amount to qualify for that higher priced property in the area that they want to buy.
Phoebe, walk us through what was happening before. If someone exceeded what was the past loan limit, what was happening?
Oh, you were getting converted to a jumbo loan with a higher interest rate, required better credit scores, more down payment, more assets. Those all need to be met. However, you know, back in the day, it was a 45% max DTI on a manually underwritten loan. But with the automated underwriting systems that both Fannie Mae and Freddie Mac have, allow debt to income ratios to be pushed all the way up to 50%. I see it all the time. It just allows more buying power. It gives the average consumer or buyer the ability to purchase higher with possibly a higher debt to income ratio, maybe a little bit lower of a credit score, those types of things.
Got it. So where we talked earlier, and people have been talking about how, as interest rates go up, the purchase power, how much one could actually buy or borrow, has been diminished. This new loan limit has actually changed that, where maybe it catches itself back up. So that's a terrific program, as well as raising the loan limit on what would be called conventional loans. Talk to us what happened at the FHA level.
HUD and the government also increased loan limits to match conventional loan limits. So the buyer who qualifies for an FHA loan with a 3.5% down payment now has the ability to utilize that $1,089,300 loan amount to purchase a single family or condo if it's FHA approved for their new home. So FHA typically has had lower loan limits than conventional loans, but this year was announced and they have matched the loan limits for conventional loans. So
it is still possible for someone to purchase something. And now, so what's happening is, here's what I want you to know. You could still buy a property with as low as 3.5% down. And the one thing that's gotten better is that the loan limit has increased. So someone could really take advantage of borrowing as much as they want. You know, in the past, when I was talking about making money on the bank's money, so borrow as much as you can. In most cases, that applies. Some cases we overextend, but that is a terrific, terrific situation. So when we're talking about why should a buyer think about buying, this has helped us.
Yes, correct. And also, there is a new program, conventional side, that allows 3% down payment.
Talk to us about that, please. Because listen, at the loan level, these things happen quick. They're announced, and I haven't heard about this yet. Right. So please tell us.
So FHA has been known to have, lower credit score requirements, more leniency. There's no reserves required on certain types of purchases. Conventional loans are a little bit more strict. They require higher credit scores, but there is a new program that will allow up to 97% financing
on a conventional
loan to $1,089,300 loan amount with no income restrictions. So that program has been around. However, it was primarily used for underserved areas, and they limited how much income a borrower could make. So most people did not qualify for those types of loans. So they went the FHA route, which has sometimes a lower interest rate, but higher mortgage insurance. Now the conventional loan is available with 3% down with a little bit more stricter qualifying guidelines. However, there's no income restrictions, which is a huge plus, which those types of loans didn't work over the last few years because of the income restrictions.
To get a conventional loan with 3% down is that's an amazing opportunity. What types of properties can our viewers purchase that would qualify for that?
So for the conventional loan, it's limited to a single family home, a condo, or a planned unit development, also known as a PUD in our world. So those can be similar to what a condo is, but they're usually detached and have homeowners associations. But those are all acceptable types of properties, but they have to be just one unit.
Which is another benefit for entering the market today. Because in the past, if we showed a seller an offer, that was a good offer, but that had 3% down, and there was 10 offers on the table, that 3% down,
it's not even gonna get
it's in the back of the list.
Acknowledged.
That was happening. But now loan limits are out. The amount you have to put down is down. Baby, I don't know about you. I'm excited at what's happening right now. This is like a great time to buy. And here's the thing. If you were not able to buy before, again, going back to the same topic of if you were being outpriced and outmatched and investors were just grabbing all the deals, all we've ever said is all you have to do in real estate is buy and hold, right? It's the whole, it's not get rich quick, but it's get rich guaranteed. You're now in a position to take advantage of these new loan type products that they've issued to buy that property and hold. And to some of the folks who say, but if we buy now and if it's worth less 6 months from now, like what's your answer to that? I mean,
my answer is, Did you purchase that property at a price you were comfortable with? Are you comfortable with the terms of your loan? Can you afford the mortgage payment? Are you living in your dream neighborhood? Are you living in your dream house? Or is that your forever home? Does it really matter if the value comes down for a certain period of time? If you're in that situation, I don't think it does. In my opinion, it doesn't. If you're looking to purchase a property and then flip it, this isn't really the market for that type of scenario. However, but if you're purchasing your forever home or you're upgrading or moving to your forever home from your current situation, if the payment works for you and the terms of the loan work for you, I say go for it.
And I agree 100%. So whether we're buying a single family home or we're buying our first fourplex, what we know, if you're buying in Southern California and if we fast forward 10 years from now, anything you buy is going to be a terrific purchase. Investment. Anything you buy. So you really can't go wrong. And so it goes back to, can you afford the payments? Does the property get offset because of the income coming in from the tenants that are there? Those are the things that I want you to think about, because this is the time to finally get your offer accepted. And all you have to do in the world of real estate is buy and hold. Buy and hold. And that is where wealth is made. So there you have it. I hope you enjoyed the video. You know what I love with sitting down with Phoebe? She is following another market. The whole lending market, it's a world in its own. And so I learned a lot. I hope you did too. Make sure to like, comment, and subscribe. And again, we service and have affiliates nationwide. Make sure to reach out. We'd love to assist you.